Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate jargon. And this report is an interesting one. It looks like we have a deep dive into a money fund, maybe too much money. Let's find out. So today we are looking at a shareholder report for the Franklin OnChain US Government Money Fund. This report covers the period from the 1st of April 2025 to the 30th of September 2025. It's essentially a checkup for investors, showing them how their money is doing and what the fund is up to. Let's start with some key numbers that give us a quick snapshot. As of the 30th of September 2025, this fund had total net assets of $718,186,960. That is a lot of moolah in one place. It also held a total of 51 different investments in its portfolio. Not too many, not too few. Just a moderate number of holdings. Now, everyone wants to know about costs, right? For a hypothetical $10,000 investment in this fund over the last 6 months, the reported cost was just $10. That translates to 0.20% of the investment. This is actually quite low, especially considering it includes fee waivers. This means that without those waivers, the cost would have been even higher. Such low costs are a good sign for investors as more of their money stays invested. Let's dive into the financial statements. The total net assets at the end of this reporting period was $718,186,960. This is up from the previous periods. For example, at the 31st of March 2025, it was $687,263,352. This growth is generally a positive indicator. It suggests either new investments coming in or the existing investments growing in value enough to increase the fund's overall worth. Looking at the financial highlights, the net asset value per S-share remains steady at $1 throughout the period shown. This is typical for money market funds where the goal is to maintain a stable net asset value. The income from investment operations like investment income and net realized gains are distributed to shareholders in a way that keeps that share price at $1. For the 6 months ended the 30th of September 2025, the fund generated $15,096,328 in net investment income. This is the money earned from its investments after all expenses are paid. This income is then distributed to shareholders. The fund's expense ratios are also informative. For multiple periods shown, the expenses before any waivers or reimbursements were quite high at one point reaching 93.40%. This is a massive expense for a money market fund and would eat up any potential returns. However, importantly, after waivers and reimbursements, the net expenses were consistently kept at a very low 0.20% for most of the recent periods shown. This sharp contrast shows the significant impact of these expense limitations that the fund managers have put in place. It's like saying the sticker price was very high, but thanks to discounts, the actual price was very affordable. Now, what exactly is this fund investing in? The schedule of investments shows that the majority of the fund's assets, about 72.8% of its total investments, are in US government and agency securities. This is what you'd expect from a US government money fund. They are investing in very safe, government-backed assets. Looking at specific holdings, we see things like FFCB, which stands for Federal Farm Credit Banks Funding Corp. These are not direct US Treasury bonds, but are backed by the US government or government-sponsored enterprises, making them very low risk. For example, to raise a holding of FFCB with a rate of 4.211% maturing on the 23rd of October 2025. Another significant portion, about 27.1%, is in repurchase agreements. These are essentially short-term loans where the fund buys securities with an agreement to sell them back at a slightly higher price. This provides a return on the fund's cash. The report details these agreements, including the collateral involved, which is typically US Treasuries, reinforcing the low risk nature of these investments. The total value of US government and agency securities held is listed at $522,778,643, with a cost of the same amount. This indicates these assets are held at amortized cost, which is standard for money market funds. This means they are valued at their purchase price plus any accumulated amortized discount or premium, and are not marked like stocks or bonds with fluctuating prices. Similarly, the total repurchase agreements have a cost and value of $195 million. This reinforces that these short-term instruments are also valued in a stable manner. The total investments, summing these up, come to $717,778,643, representing 99.9% of the fund's assets. The remaining 0.1% is in other assets less liabilities, bringing the total net assets to that $718 million mark we saw earlier. Interestingly, the report also includes a section about the Board of Trustees approving the investment management agreement. This is a pretty standard part of these reports, where the fund's directors, including independent ones, review the services provided by the fund manager and the fees they are paid. The board reviewed the nature, extent, and quality of services provided by Franklin Advisors, which is the investment manager. They looked at the people involved, how they are compensated, how they manage risks, and how they provide services. They acknowledged the company's ongoing integration of acquired fund families and their development of strategies for changing domestic policy and geopolitical concerns. They also specifically noted the company's commitment to technological innovation, tokenization, blockchain, and artificial intelligence tools. The board also examined the fund's performance. For comparison, they looked at other US government money market funds. They noted that this fund's annualized total return was above the median, and in the top tier of its performance universe for the 1 and 3 year periods. This suggests that the fund is performing quite well compared to its peers. In terms of fees, the board compared the fund's expense ratio and management fee rate to similar funds. They found that the Franklin OnChain US government money fund's actual total expense ratio and its management rate were below the median, and in the least expensive tier of its peer group. This is excellent news for investors, as it means they are paying less for management compared to most other similar funds. The report also mentions an expense cap, which further protects investors from unexpectedly high costs. The board also reviewed the profitability for the manager, Franklin Advisors, though from the perspective of the fund, not experiencing a profit for Franklin Advisors in the fiscal year ended the 30th of September 2024. This can be common for money market funds where the primary goal is stability and low cost rather than high profit for the manager. The report mentions that the manager is investing in infrastructure and improving shareholder services. The board concluded that the level of profits for the manager was not excessive considering the services provided. Regarding economies of scale, the board considered how the fund's fee structure shares benefits with shareholders as the fund grows. They noted that as of the 31st of December 2024, the fund's net assets were around $559 million. They concluded that the management fee structure did provide a sharing of benefits. So what is the big picture here? This Franklin OnChain US Government Money Fund appears to be a very stable and low-cost option for investors. Looking for safety, the fund invests heavily in government-backed securities, which is exactly what you want in a government money fund. The expense ratio is very competitive and the fund's performance, while not spectacular given its nature, is strong relative to its peers. The fact that the board reviewed and approved the management agreement, noting good performance, reasonable fees, and the manager's investment in technology paints a picture of a well-managed fund. The on-chain part of the name is particularly interesting. The report mentions that the transfer agent maintains official records of share ownership using a proprietary blockchain integrated system that utilizes features of traditional book, entry form, and one or more public blockchain networks. This is pretty cutting edge for a money market fund. While they emphasize that the transfer agent is still in full control, it signals a forward-thinking approach to fund administration. This could potentially lead to greater efficiency and transparency in the future, though the report wisely notes this technology is still evolving for mutual funds. The main risk here, as with any money market fund, is interest rate risk and the potential for even a small deviation from the target net asset value. However, the fund's conservative investment strategy in US government and agency securities and repurchase agreements significantly mitigates this. The fact that they've managed to keep their net expenses so low through waivers is a significant strength. In conclusion, the Franklin OnChain US Government Money Fund seems to be a solid choice for conservative investors. It offers a high degree of safety, very low costs, and decent performance within its category, all while exploring innovative technology in its operations. What do you think about this fund and its use of blockchain technology for record keeping? Let me know in the comments below if you found this deep dive helpful. Please give this video a thumbs up and subscribe for more corporate breakdowns. And don't forget to join our Discord for more discussions. Thanks for watching, and I'll see you in the next one.